Let's start with the markets. Futures in the red right now. We're coming off a 4-day slide for the S&P. What do you make of these moves?
Well, Frank, I think for me, this is fairly normal pullback activity after you've had a more than 30% spring back from the April lows, valuation at 22. I think this is pretty normal. And what you're seeing, the profit taking in mega caps, is also something we've seen the last year and a half. They run up based on their solid fundamentals. People take profits because the trade becomes crowded, and you move to the laggards, you move to value. But typically, it's been temporary. So I think what you saw yesterday, in terms of already some buying at the pullback, Nvidia, for instance, was down 3% at one point. It basically closed just off a little bit, basically flat. And I think that's what you're going to see as these names get a little bit lower. So I think the market remains in solid shape, given there hasn't been a lot of change in the economic outlook in terms of unemployment at 4.1 to 4.2% the last 6 months. You're not seeing layoffs, and the consumer is still spending. We've seen that in all the earnings reports, starting with the banks, the airlines, the credit card companies, and also the big increase in wealth since 2019, up some 39% in financial assets.
So Barbara, just to be clear, you seem to have a lot of conviction this pullback is just very temporary. You describe it as profit taking, but I just want to say one thing in all fairness. People generally only take profits when they think there's a moment coming up where stocks are going to pull back. They want to lock in their gains ahead of that pullback. And of course, we have Jay Powell speaking at Jackson Hole tomorrow. So I want to bring up something, a note from Monday. We rarely do this, but there was a note from Monday from Evercore ISI, Julian Emanuel, saying if we get a especially hawkish Jay Powell, or I guess maybe not a dovish enough Jay Powell, coming up tomorrow, we could see a pullback in the market of 7 to 15% over the next few weeks. Just to be clear, he doesn't think it's an immediate pullback. I actually talked to him on the phone yesterday. He says he believes that pullback's already started because he thinks the setup is for a hawkish Jay Powell. Now, are you seeing any signs of that the pullback that he's calling for may already be underway in the last couple of days?
Well, Frank, it's always totally possible. There's no question there. But I don't see it because I think Jay Powell will come out. I think it's hard to read ahead of time. I think he will be his normal neutral self. We have to weigh the balance of power here. But I think he will address the recent payroll numbers. But I think he will come back to, we are not seeing signs of a layoff. We are not seeing, signs of consumer pullback. It's lower income, yes, definitely under pressure, particularly given, tariffs and the increase in certain goods, appliances, et cetera. But I don't see at the beginning of the pullback because really that's a question of what's changed. The market seems to be discounting already 2 more rate cuts this year, maybe 2 more next year. But I don't think the Fed really needs to cut in any hurry here. As you mentioned earlier, the odds in September cut are just over 80%. By October, over 90%. But we've seen these high increases or these predictions, and it hasn't come to pass, and the market's been fine. So I don't see this being a deep pullback here.
All right. One other factor is seasonality. Over the last 10 years, September's been the worst month of the year for the S&P, pulling back on average about 2%. There's been some reports out about short sellers making $5 billion over about 2 days when it comes to shorting those AI stocks. How do you factor in some of the seasonality and also some of that pressure when it comes to from short sellers and also the options market? A lot of people buying downside protection and betting against some of the biggest names.
Well, I think that's institutional risk management behavior and totally understandable. And, to bet on seasonality is tough. If you'd done that in May, sell in May, go away, you'd have missed a big move. And also right now, in terms of seasonality, this is, as we know, this is the last 2 weeks in August are when a lot of traders, a lot of portfolio managers are on vacation. And so it's thin trading, the volumes are down. So yes, September could be typical, but it's not every September. And I think this economic cycle and the market action has been atypical enough that, they can make their bets. And if we have a lot of short sellers coming in, that's okay because that provides buying opportunities in a little bit later.
I just want to put a bow on it, and we got to go so very quickly, Barbara. So you're saying buy the dip. Just give us one sector you would buy the dip in.
Well, I think when these mega cap tech or growth, come in a bit more or even here, you should buy them, particularly in front of Nvidia and Broadcom's earnings.